Welcome back. Now, in a bid to nationalize the Reserve Bank in 2018, EFF leader Julius Malema introduced the SA Reserve Bank Amendment Bill. It lapsed twice since his submission, but it is back in the spotlight and finally up for public participation. Reaction to the proposed legislation is mixed, and while the state opposes it, Cosatu has welcomed it. The organization's Matthew Parks joins us with greater perspective on their stance. Matthew, thanks so much for your time this afternoon. And let's start there. What do you make, of the government's stance and the reasoning behind opposing this amendment bill to nationalize the Reserve Bank?
Good afternoon. Thank you for having us. So I think government was saying in principle they agree with what the bill is saying in terms of its objectives, that the state should be the shareholder of the Reserve Bank. The state currently is the majority shareholder of the Reserve Bank, but we have a bit of a weird historic anachronism where we have minority private shareholders in the Reserve Bank. So that's a very unusual thing internationally. I can't for the life of me explain to you why that was done many, many decades ago. So the bill just simply says the state should be the sole shareholder of the Reserve Bank. And that's the norm across the world. Whether you look at the United States, the Federal Reserve, whether you look at Great Britain or Europe or Japan, etc. Across the world, that's the norm. So all the bill says, which is why we supported it, that there should be a process for the state to be the sole shareholder. I think what government has raised, without becoming a spokesperson for government, obviously, is around unintended consequences. I think government raised the fear about investor confidence.
Yes.
But we don't think that should be an issue because the state is already the majority shareholder in the Reserve Bank. The state, or the Minister of Finance, appoints the governor of the Reserve Bank, the deputy governors, and so forth, to constitute the leadership team. The constitution of the state gave the mandate to the Reserve Bank, including around inflation targeting and so forth. So it wouldn't be a fundamental shift per se in that issues. Yes, one would need to communicate things because nowadays with fake news, social media hysteria, etc., they handle such delicate issues quite tightly. But I think for us, look, we do need to have a state being the sole shareholder in the Reserve Bank. It is a public institution, has a public mandate prescribed by the Constitution, by the Reserve Bank Act, to manage the value of the currency, to manage inflation, but also to support economic growth, and also to oversee the private sector banks as well. So I think it's a question of what is the pathway forward in that journey. It will happen, but I think you need to do it in a way which addresses government's concerns about not spooking the market, so to speak, but also to address the concerns of Cosatu and even the concerns of the draft of the bill, in this case, which is Julius Malema from the EFF, to say, okay, we need to find a route that takes us to the state, like across the world, being the sole shareholder of the Reserve Bank. I think that's a fundamental principle.
And, Treasury also then raised the question around how government would fund buying out those shareholders, and the fact that it could also just lead to legal battles.
Yeah. So I think for us, that's one of the modalities we must look at. In terms of, you'll be guided by the Expropriation Act. The Expropriation Act advises when government and how government deals with the issues of expropriation with the private shareholder. The finance minister previously has raised concerns about the price tag. In fact, we have seen reports that some of the shareholders themselves are actually keen to seek expropriation because they want to sell and make a bit of a profit. So we don't think we'd want to see people profiting out of it. But the Expropriation Act provides for just and fair, equitable compensation. So there would need to be an indication from government to say how much would these shares be worth, how much could the fiscus afford, what is the pathway to do it. We appreciate the fiscus financial constraints are extremely tight, and there's many pressing legitimate competing demands on the fiscus, from hiring doctors, paying nurses, fixing our roads, investing in water, all of the important issues. So if government can say, look, the price tag, for example, is going to cost 10 billion rand, for example, we can afford to pay 1 billion rand a year, that's fine. Then you can say, okay, well, over the next 10 years, that's how you're going to roll it out. But we do need to have a discussion. As long as if this thing needs to be done by tomorrow, that's fine. But look, we do think at the end of the day, whether it's tomorrow, whether it's in 10 years' time, whatever makes sense, logistically, financially, etc., we do need to be in line with international norms, and which is also the spirit of the Constitution too, which established the Reserve Bank to say the state should be the shareholder. And I think for us, it's just having a sober conversation, not having a conversation on one extreme of emotional slogans, which is
Yeah.
not helpful, or the other extreme of fear-mongering, again, which is not helpful. We should have a calm adult discussion in this regard.
And talking about, the fear mongering, one of the other issues that have been raised was the independence of the Reserve Bank. And if, SARB were to be nationalized, how government would then ensure there isn't any political interference when it comes to its mandate. Talk to me about what nationalizing the bank would look like for Cosatu, right? Would it just apply to the change in ownership without interference, or would it include perhaps changing, revising the Reserve Bank's mandate?
So look, I think number one is the Reserve Bank is a public institution. It's credited for under the Constitution and also specifically under the Reserve Bank Act. Its mandate is specified by those two legislation and also by the Finance Minister, specifically to protect the value of the currency, to protect workers from inflation, to also help support economic growth. So it won't change fundamentally.
Okay.
The shareholders here, the private shareholders, are minority shareholders. So the overall framework wouldn't change. The state would remain the owner. Just in this, the shift would be that it would become the sole owner. But the state already appoints the governor for the Reserve Bank. It appoints the deputy governors. It gives it the target around inflation. It also, gives it the broad macroeconomic framework mandate as well. So those wouldn't fundamentally shift. And I think that's also we're not keen on the kind of fear-mongering route, because we've seen the damage that can do over the past year, when very common, sober, sane legislation like this Probation Act has been weaponized by some who seek to undermine and distort things. So I think for us it's about having that calm discussion. There's no rush to do this thing tomorrow, but we do need to come to a way to resolve the anomaly where you have this private shareholder. It becomes a political irritant, and it's one of those things we can actually do without as a country.
Yeah.
But I think fundamentally it wouldn't change the overall system, which is the point the Reserve Bank has made as well.
So clearly there just needs to be more conversations about how we get to a point where the state is the sole shareholder of the Reserve Bank. And just a quick question before I let you go, Matthew. Now the SARB has been, getting mixed reviews around lowering the inflation target. Just your reading on that move.
So I think first, that's one of the disagreements we've had with the Reserve Bank. We do meet with them frequently. We appreciate the mandate of protecting the value of the currency. That's critical for economic stability and growth. We appreciate the mandate to protect workers from inflation, because workers earn the least. And when inflation rises or gets out of control, it devastates workers' ability to take care of their families, to feed their children, to pay their debts, to pay their loans, to spend money in the economy. So we agree with that. I think where we disagree with is that when we feel they tend to neglect the other part of the mandate, which is to support economic growth. So during the past 3 years with the war in Ukraine, international oil prices spiked. That pushed up inflation to past 6%. The Reserve Bank over those 2 initial years increased the repo rate by 475 basis points. So that made workers' home loans much more expensive immediately. It meant less money for workers to take care of their families, to spend in the economy. That helped to slow economic growth down, which is really quite painful. Now, inflation has come down significantly from that 7% plus, I think 7.8% at the peak, if I'm right, to about 2.8%, 2.7%, give or take, roughly, over the past 6 months. But the repo rate has only declined by 75 basis points. So we think there is space for the Reserve Bank to give relief to workers, to inject liquidity into the economy, and to help the economy to grow and help jobs to be saved and jobs to be created. So that's where we disagree. We think they can balance the two a little bit better. Yes, protect the rand, manage inflation, but also help stimulate the economy to grow and help to also ease the debt burden upon workers, upon society at large, and thus help to grow the economy. So I think for us, it's about finding a bit more of a balanced approach, so to speak.
All right, Matthew, thanks so much for your time and just sharing your insights on that. That was Cosatu's Matthew Parks.